Simply Traders Academy. I am so excited that you are here and joining us today. But what a move in the stock market it has been for the last several days. Let's start off one of the big things that have been turning the markets has been the tariff and a lot of the talk over the weekend of how this was going to affect the market. Well, yesterday the market was brutal against many investors with the stock market on Monday just really tanking, and then with just a flick of I guess a tweet or a truth, you have like really these governments caving in and really supplying what President Trump wanted for them to do. And a lot of it, if you look at it and get away from the political realm and just look at what the rhetoric was, a lot of it was simple. You bring 10,000 troops, help stop the flow of drugs, there's no tariff. I mean, that's pretty much, I mean, it was reasonable demands. It wasn't like a threat to take over their country. Same thing with Mexico. And I think after cooler heads prevail, you start seeing that a lot of this is really things that are avoidable and pretty much is going to be a benefit for all Americans, especially those who have been their family members or children have been victim of the drug trade and the fentanyl and all that has been through that. So that is something that it's looking that has affected the markets, but really again today the market pivot very quickly, and that's what you expect to see in a Trump administration. A lot of really quick moves either direction. One tweet or one something will change the trajectory of the stock market, and this is a case by case and day by day basis. So what you're trying to see really in the stock market, it's really like a shock therapy or shock diet that's really happening to the economy. Think of it if you're going to go on a crash diet and you just basically water and crackers after you've been eating Chinese buffet for a long time, and you just go on a water and cracker. Your body wants sugar, your body wants this, your body wants that. So the economy is getting a really shock, and what's happening is it's trying to revive the economy through different and unconventional ways. One thing that is a fact, whether you are from different sides of the aisle, whether you're Democrat or Republican, it affects all of us as investors. And as we look at it, we get away from the political realm, and many of these people will never shake our hands. So I don't get too involved. Like, none of them are my heroes. But I also look at that. I'm the CEO of my family. It behooves me to learn how to invest and actually look at the moves that are happening in the stock market and what's happening with the policy in Washington, D.C. And also figure out how can I position my money and how can I have George Washington right here, my trusted friend, working for me, because I only want to set George Washington free if he's coming back with two or three. You just need to know where to set him free. And in the stock trading world, that's where we want to know where to set him free. And as swing traders, we love taking advantage of those moves in the market. As swing traders, we can just switch hats and about face at a moment's notice. Many basketball players can pivot, and you have a pivot foot where you can move and just pivot from one direction. But what it allows you to do is to change directions quickly. And as stock traders, that's what we do. We learn how to change and how to pivot very quickly, from knowing when to get out of a stock, when to know when that run is over, and also when to maybe stay in some good stocks for the long term with those dividend yields and those type of plays. So we're going to take a look at what are some of the news that has affected. Now, after market, there has been so much news that has happened, even within the last 15 minutes. Right now, President Trump has declared that they're looking to take over the Gaza Strip with maybe bringing a peace deal probably to that region. I don't know how that's going to work, but one of the things is the stock market is reacting. How is this going to affect this? How is this going to affect trade? And this is what I understand. There's businessmen involved. I think that if you look at the leaders, many of them are wealthy. and they're probably going to talk business. How can they all get along? And people who do business together get along and don't fight. I believe the US could be the mediator between those two countries which have been fighting for a long time. If you really notice, if you go behind biblical times, this is really a family affair. And it's brother versus brother fighting over a will, if you really look at it from a biblical perspective. But we are looking for what's going to happen in that region. Right now, the futures have not reacted positively to the news. Now, this news just came out. Right now, we're going to look at what's happening with those futures. And let me see what CNBC is reporting right now. Do a refresh. But right now we are looking at the futures are down 12. The S&P is down 12. The Dow futures. Okay. That was an error. I thought it was 700 points, but it was 7 points. It's down. So the Nasdaq just a little bit. I think this is probably going to be a quick turnaround. You have seen some great moves here. I want to say like Palantir. I have been bullish on Palantir. One of those things is I believe that stock is going to move even more now with the bullish move that it has had over the last day. This is not probably the best time to get in. You have to probably wait for a small retracement if it even does that. But I am more bullish on Palantir than I am on AMD. Now, AMD reported, and AMD, their stock has gotten beat up. And right now, their stock is basically back to the that 100 103 range where it has gone up, it's gone back down to that same price point, shot up to the $180 mark, and now it has retreated right back to that 103 mark. So right now AMD is not on my long-term watch list. Now, could it take off? Potentially, but that's more philosophical type of play. It's not something that we're looking for now. But let's see what we're looking at. I'm gonna share my screen with you guys. So let's look at. Okay, share, and I'm gonna look at like some of the news that has happened and refresh this from Google. Google kind of tumbles, and we're gonna look at that stock in a little bit. I am still bullish on Google, but Google is at a price where maybe certain investors are trying to look at. It's right now after hours. It's at the 191 mark, which is actually close to a place of support or a supply or demand zone, whichever way you talk about it is either the same. To me, supply is support and resistance. A lot of people use the supply and demand analogy, but it's the same thing to me. I've always seen it that way. As a visual learner, you could be like a stock trader and learn how to read a chart. So let's look at this one's on CMG. Let's look at some other. Let's look at Google right here, Alphabet. So this range right here, we're looking at, let's look at, is this a 1 year range? So we look at this gap right here. I would not be surprised if this stock drops again. Like right now, after hours, it's already dropped 15 points. Really, if you look at the stock, there's really dropped about 15 points. If this stock drops, and that's a if this stock drops, you could see it either hit and bounce off that 191 and go right back up, and then just kind of wiggle around, just kind of like what it's doing now, or there seems to be a candle here that has a gap that has not been filled in this vicinity right here. Generally, when gaps like that happen, companies generally go back and fill them. Now, could it be maybe an anomaly and it just goes back up? Could be, but if you look at gaps over here, filled. This one, you can kind of say, wait a minute, but what about that one? Yeah. So I would look at if a stock drop where either they didn't meet marks, they didn't meet earnings expectations, they didn't meet all this stuff, or a lot of their AI or a lot of the Waymo stuff is not really generating any income. I could see that first stop fill this gap here in that 177 range, 175. But if it goes below that, I will see it go down to the 145 range, 144. So that's one of those things that we look at Google and you have to see, okay, if you're investing for, hey, I want to make a 1 or 3% return, I don't know if you want to do it at his all-time high right now, just at this level right here, or let's look at it at his all. Is it at the, yeah, it's at his all-time high. I mean, that's it's kind of looking at that, and that's, it's including the split. So that, it kind of look at that with a grain of salt. But I do like this play. Google is just not right now, but for you value investors, if Google goes bounces off the 191, I might consider it. If it keeps falling past it, I may see if it touches that 177, 175 range to maybe look at it. Like I mentioned, AMD is a dud. I'm sorry, AMD. I mean, it's just it's a dud. It's a dud. The all time. Okay, let's look. I mean, it's a dud to me. 5 year. Eh, I don't know where AMD is going to go. To me, is I think a lot of people thought that because she's related to Jensen, it might rub off. Kind of like is like the star athlete, and they have a son, or are they going to be good? I don't know. I don't know. So not taking anything away from Miss Amy Sue. She's a phenomenal leader, but I don't know if AMD is as advanced as Nvidia is, and that's what I think is the problem here. Is they're not. It's not they're not making money. They're actually beating. They're meeting their expectations, but the growth of the data centers, it's not where it needs to be. That's the biggest key thing here, and it's not like revenue. Revenue, okay. If it was just revenue, this stock would have shot up. But from 180 to 103 is a huge fall, and this happened in about like a, what we looking at, the earnings right here, 80, 180. I mean, once actually the 220, and it just dropped from here. I mean, there's nothing. It just went back, and then it tried to go up right here. This is where 180, and many people thought it was gonna bounce, and it just dropped. I mean, this is perfect. Boom, boom, boom. I mean, it's AMD to me is on a downward trend. I will have to see it fall in this direction here, in this $70 to even get back in. I'm more bullish on Palantir than I am on AMD, and that's saying something because I really do like AMD, and I sold all my positions in AMD months ago. Just it was a dud. It was a losing trade for me. So that happens as a traders, and all of you who trade know that. So it was a dud. Tesla, my baby. I love Tesla, but it hurts to trade this one. All these traders know. For me, I am still bullish on Tesla. That 377, that 379 range seems to be a hold position for this stock. This place right here is just a hold position for Tesla. I'm thinking more of long term. I love this stock is in my portfolio. Um, I try to recommend stuff that I do. So I know there's many great stocks out there. Brian has his own great stocks that he likes to also. But these are stocks that you have to have some Pepto Bismol to trade Tesla, because it's one of those where when it runs, it is phenomenal, but it's a feast of famine. You can eat steak one day, and then the next day eat pork and beans. So it's one of those, but I do love it. I'm still bullish on it. I'm still 850 is still my mark, but we need to get past that $500 mark. That's where we want to see. And Tesla is one of those things. Oh, he getting a contract, boom, goes up $100. So it's always one of those you never know unless you're in the play. And then you say, I'm glad I'm in the play. So Tesla is like one of those that I love. SPY, Let's look at SPY. Just steady Eddie. Steady Eddie. If you are a dividend investor, we have many people that trade with us that are many dividend investors. SPY, to me, is one of the top ones. Many others recommend the VOO. I know Brian has talked about the VOO. It's kind of one of those stocks that I really like. It's an ETF mover, and it's one of those stocks that you really don't have to think about what companies are in there. I mean, they do it for you. Standard and Poor's is the bellwether. I'll say that again. Standard and Poor's is the bellwether for the stock market, and if it's a steady Eddie stock, so they generally try to pick the best 500 companies in the U.S. SPY, Meta, again. You know what? I'm liking Zuckerberg. And I try to look at the genius in people, and I try not to get through political realms and stuff like that, but you look at the genius in people. I really like Mark Zuckerberg. I think what he's doing with Facebook is, even though Facebook is like an old person in social media world, and that's weird saying that. I'm very weird because I'm 47, but uh, Facebook has really aged gracefully in in social media platforms. It's age, and it's almost like they're fitting into their clothes, like they're aging gracefully. And I believe that there are many people that almost that will stay on Facebook just to stay the connection with family members, your grandparents. And if anyone's been using Facebook for over like me, I've been on it since it started. I mean, it's since 2000, well, almost like 2004, 2005. And really, it's just one of those things that I still see myself. I still communicate with people there, and then I still see it as a form of a communication. And they're building so many other outlets to bring in revenue that I believe that just it's a bullish company for me. So like, if you have seen, what a beautiful, just look at this beautiful pattern up, just fanning the way up. And I think that that is going to continue to really play out. Don't be shocked if Meta's at 1,000 uh, by September, or September, or even by December of this year. I'm really thinking Meta is, Zuckerberg is playing the right cards. You know, playing nice. I guess that helps in the business world. So Meta, what other ones we have here? Ford, Ford is just, it was in a channel for the longest. It was in this $10 to $15 channel for the longest, but it has left the channel, and the only thing worthy of this stock is the dividend. Ford needs an overhaul. I've known this for months, but the leadership at Ford has really needs an overhaul. Uh, I'm still bullish on the company, but not for swing trading. This is not one of those stocks. It's a dud. This one, get it out. The Russell 2000. We'll finish that out. Russell 2000 really has been moving. It is almost uh, at levels where it was. It kind of had a nice little drop in that 1600 range. But the Russell 2000, I mean, I'm bullish on the Russell. I believe that manufacturing companies will come back to the U.S. And it's a great credit spread type of trade. Now, when many people trade credit spreads with the Russell, I've seen many people trade in different ways. I like to call what's many people like doing the bracketing and just bracket in. I've never liked that theory. I've always liked the legging in, and I always use a theory of double dutch, that usually when someone's doing about to go into a double dutch, is like you're anticipating, and you're just moving to the beat and moving to the movement of the rope, and then your timing is just got to be impeccable. With trading the credit spreads, your timing you have to leg into the trade. I have been more on the bullish sense, so you're kind of looking at probably like maybe legging in from a bear call spread first, then also then adding the bull put spread on the top close to expiration and just getting that 20 15 cents just leg on the top and just collecting like maybe a 30 35 cents on the bottom, and just kind of making that 3 4 5% a month on a credit spread. I mean, bread and butter right there. And I'll probably be doing a video on credit spreads, which is what I love trading, in addition to swing trading. But this is what we're looking at. Tomorrow, we don't know what to expect. I mean, we're looking at the diamonds at steady Eddie, but we don't know what to expect tomorrow. With the Trump news, that happens, you never know what to expect with the stock market. And that's the thing, is you have to be ready. And that's why it's always good to trade with a game plan. As disciplined traders, we are always learning how to maximize what we see, what numbers tell us, and also what the indicators are really, what has this stock done in the past really tells us where we're going forward. Whether you're new to trading or you've been a seasoned trader, you can always learn how to pick up different clues by just looking at just simplicity. And that's what we like to teach here. We like to look at simplicity, and instead of making it so complicated. When I first started trading 16 years ago, everything was built on on complex, like algorithms, or just things that were never meant to for me to be a good trader. And what I ended up doing was committing so many mistakes. But I've learned how to take in those skills and everything that I've made mistakes on it, and how to formulate it into simplicity. So if you've ever read music, if you're a visual learner, even if you're a numbers person, you can learn by looking at numbers, or like how I show, like support and resistance, or supply and demand zones. Those are areas where you can always improve your trading, and you can always move your family forward and your financial portfolios. That's what we're doing here. In the next few years, take the next few years to build up your portfolios, pad up those investments, increase your savings by doing it the correct way. And you can do it through trading the stock market. Follow along for more details, and we look forward to serving you and your family. Until next time.